Hey there, welcome to webinar number 2. We're going to do perhaps 2 topics in this one. We're going to go back to the tax forms, take a look at those for purposes of recognizing some of the basics of tax preparation, just going over some of the things we can learn by looking at the forms. And by the way, in the instruction guides to many of these forms, you can get a whole wealth of information that is helpful for this course and for preparing taxes. Okay, so let's go back. This is not the first time we've seen this. This is in the appendix of your book. And at this point in the semester, as we get towards the tail end, a lot of what we're going to look at here should ring a bell as to familiarity. Some of what we'll talk about also are tax tips for tax preparation, as we mentioned that we will try to discuss what it's like to be a tax preparer and get a handle on some of the methods of tax preparation, what it would be like, and teach you to be ready to approach a software program for the purposes of tax preparation. Most software programs will follow the form to a great degree. The first thing you'll put in is the names and addresses of the individual or individuals if it's going to be electing a joint return, the social security numbers. You'll also enter the date of birth, which will automatically figure out whether or not they're eligible for a higher than usual standard deduction due to age, and it'll help figure out whether they're eligible for the earned income credit, which is age sensitive. As we learned, over a certain age, the earned income credit is not eligible. And I think that would be a good review question, even though it's not relevant to our particular topic today. So that'll be a polling question we'll get to when you get there, the age limits for that, which will again prove why date of birth is a item that you'll need to pick up from clients that you're preparing tax returns for and enter this into the system. Then you'll fill out the filing status. This we covered early in the course. Whatever applies to the particular taxpayer. We'll fill out the exemptions, which are you get an exemption for yourself. If it's a joint return, you get one for your spouse. And then you'll list the dependents by name, their social security number. We talked about why the social security number is required. You'll describe the relationship, that's for the IRS to understand whether the issue of the dependency is one that may be subject to audit. Some of the choices will be son, daughter who live with you. Other, qualifying relative, could be another choice. And other than that, could be parent, could be non-relative. And these are choices that the software programs that you'll use to prepare a tax return will give you, and it'll be the same codes that are in the instruction guidebook for the Form 1040. You'll check the box if they're under 17. That does a lot of things, but mostly whether the child is eligible for the tax credit, the child tax credit. Every person at certain income levels gets a child tax credit. And that ought to be polling question number 2. So we'll see, we'll fill in a lot of gaps here of things we might have not gotten into in too much detail, but things I think are good to focus on. So what is the child tax credit? Some of the rules of that you'll want to look in your textbook before you take the polling questions. Then we'll get to the number of exemptions so that when we get to that on page 2 of the tax return, we'll already know how many apply. Dates of birth will be entered in with the dependents as well, because dates of birth indicate other factors for within the tax return in addition to whether they're eligible for the child tax credit. Dates of birth are relevant for the dependent care credit. Dependent care credit. And while we're on the topic of births, dates, and ages, so let's make that polling question number 3. Take a look in your text as to the relevant age rules for dependent care credit. And while you're there, read a little bit about the dependent care, because that will be something perhaps relevant to you in, well, not necessarily right after school, but as you mature, graduate, get a job. Perhaps many of you will get married. Many of you will have children, and your relationship with your spouse. Both of you may be working, and you're going to incur child care expenditures to help allow both of you to work. So that child care deduction and/or credit will be valuable to you from a tax standpoint under that famous wherewithal to pay principle. You're both working. You have to pay for child care. And that cost is to allow you to work, to develop income, and it allows you to make money to pay taxes. So, as a way of saying, I suppose this is just my opinion, and it's a little bit tongue in cheek, but as a way to say thank you for working to help the economy and to pay taxes on your wages that you're earning. Here's a little child care tax credit for the cost of taking care of children that allows you to work. Perhaps the reason of wherewithal to pay and my tongue-in-cheek reason really are truisms behind the child tax credit of the dependent care nature of dependent care credit. So there's two types of credits that'll show up as polling questions. The child tax credit, and I want you to pay attention to what that is. We already know the age limit here, but just read about it enough to be able to answer a polling question. And for the dependent care credit, specifically the age, what does the law say about who's eligible for that? All right, so the rest of the form, we've seen you're going to enter in your wages, and the tax software will have a way pretty much of following the form down the line. If this was a tax software, you can right click on any particular line and it will take you to the input portion of the software for entering in that information. So if this was a tax software program, at this point it would have as part of the choices to jump to the input part of the software, and I could enter in the wages there. So I could merely follow the form. I wouldn't have to actually go into the interview tablets of the tax software where they show you a whole bunches of places to put information. I could just follow the form and go down line by line and enter information that way. The software usually gives you a couple of choices of how to approach entering the information, and that's just certainly one of the easier ones is to follow the form. What you'll do is you'll collect all the W-2s for line 7 from the individual or individuals whom you're preparing tax returns for. You'll then collect the forms 1099, which will be of a nature for entering information on lines 8 and 9. And so for polling question number, I think we're up to number 4 now, is I'd like you to know what form 1099 specifically would be the form for entering information on line 8A, and what 1099's form specifically would be the one for entering information on line 9A. So what you're going to want to do is look up what form 1099 it is. In other words, there's a series of forms 1099s. There's a 1099-MISC standing for miscellaneous, and that might be part of the polling question as to what is that used for. So that might be a polling question number 5, I think we're up to. So I just want you to get comfortable with this series of forms 1099s by looking at that. You can just go to the IRS website and click on Form 1099, look at the instructions, and start, and it could even be in the textbook, get an idea and feel for what they're like to look at, what they're like to get, what kind of information do they give you, so that you can get comfortable with that because those are forms that you'll be using when you're doing tax preparation. And at the risk of giving away the answers to questions, let's just go in and see. Here we have on the IRS website Forms 1099 general instructions. And look, they do indicate that there are a variety of forms out there. The 1099 series is the one we're talking about now. And while we're at it, we might as well have as polling question number 6, find out what Form 1098 is all about. Form 1098. So let's take a little bit of a diversion here for a minute. Here you see beginning the Form 1099 series. That's what I meant by series. There's an A, there's a B, there's a C, there's a CAP. And these forms are telling the IRS lots of different tax information that helps the IRS match up whether or not a particular taxpayer is reporting all of their income properly or all of their tax transactions properly. For example, look at 1099-B, proceeds from broker and barter exchange transactions. So if you're involved in that, you are supposed to report how much you paid somebody in brokerage so that the person who should be picking up broker transaction income will receive a copy of that telling them how much income they should pick up. Form 1099 goes to the taxpayer, no matter what series Form 1099 it is, it goes to the taxpayer and to the IRS. The IRS uses it to match up to the filed form to see if the taxpayer has reported all of the tax transactions that are included in the Form 1099 series of transactions, and the taxpayer gets a copy so that they know what they have to report on their tax return. Here's 1099-C, which I think we recognize as COD income. So you might want to think to yourself, well, who would fill out a Form 1099 COD? Who does fill out that form? So that's a good question to ask as well. Who would fill out a Form 1099-C? Remember, it's going to go to a taxpayer to tell them that they have cancellation of debt. And a copy will go to the government to tell the government that this person had cancellation of debt. And again, the computer programs both at on the IRS level will try to match that to the return to make sure that they have been properly reported. Without telling you that this is an answer to a polling question, I'll just move the cursor over here. And you can see that this has some relevance. And as you can see, without going through all of these, there are a lot. There are a lot of different 1099 forms. Here's another one of particular interest to you. And here's the famous Form 1099 miscellaneous. So you might want to take a look at that on the IRS website to get an idea of some of the things that show up there. Ask yourself, who's the payor or the payer and who's the recipient? Well, the payer in most 1099s and the person responsible for filing 1099s is the person paying the money of a transaction to the recipient, as it's described here. So if someone's paying rent to a landlord in a commercial business situation, they're going to report the rent paid here, and they're going to describe the recipient's information here. They'll give a copy of this to the recipient, the landlord, and they'll send a copy to the federal government. So the federal government can then look at all rents reported by the landlord to see if it matches. And you can see there's other types of income here that can show up on this 1099 miscellaneous. You'll see a lot of these. If you get into any kind of tax compliance work of preparing tax returns, you're going to be dealing with Forms 1099 until they're coming out of your nose. Okay, so that's fun. So again, the Forms 1099 are reported, and the instructions are reported by payers to the recipients, and they're also sent to the federal government so they can match what the recipients received in terms of various types of income. And again, you can see there are a lot of different Forms 1099. If the IRS had their way, every single transaction that we would do during the course of a year would get somehow reported. Every single, I suppose, taxable type of transaction would get reported so that they would know exactly what our tax return should look like in terms of reported income. Here's another famous one. It's the sale of a real estate. So the sale proceeds from real estate sales, when someone sells it, will be reported to the at this time it's called the transferor, but that is the same as the recipient. The transferor here means the person selling the property. And the filer here is not listed as the buyer or the transferee, because oftentimes there is a settlement agent or a title company that is acting as a conduit for the parties in the transaction. And so it becomes the duty of the settlement agent or the title company or the lawyer, if a lawyer is handling it, to file this form describing when the property closed, meaning the date of sale, what was the gross proceeds, what was the address of the property here, and the information of the transferor. And all 1099s, the recipient, as here, will have their identification number. So how does the preparers of all these forms, whenever they have to be prepared by somebody, how do they know what is the tax-paying recipient, or the taxpayer, the recipient's identifying number with which to report on these 1099s? So you use a W-9. It's a W-9 form that if you hire somebody who's going to be an independent contractor for real, or if you have a rental situation where you're renting from a landlord, or if you are a bank and you're going to be paying interest to somebody, you're going to give them a W-9. They'll fill out their information and who they are and their address and their ID number. Where's their ID number? Let's see. Here, taxpayer identification number. Taxpayer identification number for a individual will simply be the Social Security number, and if it's a business, it'll be what's called an employer identification number. Doesn't mean they have employees. They could be a business without employees, but they have a business number known as a Federal Employer Identification Number. Again, listen to what I said, Federal Employer Identification Number, because this is a number given out by the federal government. Hence the initials FEIN. And although it's kind of silly, that'll be polling question number, I think I'm up to number 8 right now, or 7 or 8. That'll be another polling question, because it's an acronym that if you're doing tax practice of any kind, you're going to want to get to know. You will get to know it. So W-9 is, you may have already seen these in your lifetime. The bank where you have a savings account or some type of brokerage account may have already given you a W-9 to fill out. That's how they know where to send the 1099 forms that you receive. And of course, you sign it saying that all this information is correct, and then they'll mail you the information. Okay. They also mail it to the IRS. This is so much fun preparing tax returns, isn't it? Let's go back to the 1040 for a minute and stay with this concept of what it's like to prepare a return. Taxable refunds. Why is that getting reported? What kind of refunds are these? And this would be a Another good polling question. Let's talk about what it is first. We've probably done it before, but let's do it again. If a taxpayer pays state income taxes, as an example, or real estate taxes, that could be a tax deduction on Schedule A, itemized deductions. If that doesn't sound familiar to you, I suggest you go to the textbook, read about itemized deductions when it comes to real estate taxes or state income taxes, and drill it into your frontal lobe of your brain, because this should certainly be familiar now. Go to Schedule A, take a look at the itemized deductions, go down the list. We'll probably do that in one of these webinars or in class. So if a person took a deduction of state income taxes, which they are allowed to if they itemize, or real estate taxes, and then the next year it turns out they paid too much in state income taxes and they get a refund, the refund could be taxable to the recipient, to the taxpayer, under Section 111, the famous tax benefit rule. And if you think that won't show up on the final, think again. So the tax benefit rule means that this may be taxable when they receive the refund. Maybe. But suppose they didn't take a deduction of the real estate taxes or the state income tax. The state, if they issue a refund on real estate taxes or income taxes, if the state issues this refund, they will still report it on a Form 1099. Form 1099. So let's see where they report it. Let's go back to that. And look here. 1099-G, certain government payments. You'll learn something from this. The payer will be the state or the local government that's paying it. And there's your recipient who's receiving the money. Unemployment compensation is reported. That must mean to you, if you didn't quite catch it already, that unemployment compensation is taxable. That's why the government is insisting that the states send out a 1099-G to the recipients so they'll know to put it on their tax return. And here in box 2 are refunds of state or local income taxes so that they can tell the taxpayer, hey, you received money back as a refund or a credit or an offset of some sort, and so therefore you know to pick that up and perhaps report that as income under the tax benefit rule. And don't think I'm not going to ask a question on the tax benefit rule, maybe as a polling question. Box 2 says, or box 3 will tell you for what year the refund is, just so the federal government can keep it straight. Sometimes income taxes are withheld on unemployment compensation, so the federal government wants to know how much was withheld because you get a credit for that. And you can see there's other types of payments that go on here that we're not going to talk about today, as they rarely occur. They do happen sometimes, and you can go to the instructions and learn about each one of these boxes. The neat thing about the IRS instructions is that each box on here will be explained as to what's supposed to go there. And indeed, there are instructions to the 1099-G, and there they are. I don't know if I'm going to click on them. I think we'll skip that, but you get the idea. Okay, back to the 1040. And let's see how much more we'll do before we take a break. Okay. Alimony received, line 11, is taxable. Business income from Schedule C, we want to concentrate on that in a few minutes. Capital gains and losses, we've talked about. Other gains or losses we'll be talking about in class from Form 4797. Distributions from pension plans, we have a chapter coming up on that. Rental real estate income, we have talked about that. Rental real estate is similar to a trade or business. It's just not subject to self-employment tax. And the results of the rental real estate will show up here. see Schedule E. Let's look at Schedule E because it's fun. I'm having a great time. Schedule E, they call it supplemental income and loss because I guess you can lose, and it's not from a trade or business. Perhaps that's why they call it that. And there's different types of income that do get reported on this form. Perhaps that's why it's called supplemental. And let's see what it's all about. First, we'll put the name. Every form has its name and social security number so that if the forms are lost and in the shuffle, the IRS will know who to match up the form to. We're going to list the properties that are involved by address, the type of property, and you can see there's different types. And from class, this will be a great polling question. From the class that we just had, why is the IRS concerned about what type of property? Well, there could be a couple of reasons why the IRS is concerned on what type of property is being reported on each column here. As we get to it, this is the address of each column's property. And if you need more forms, you just add forms to it, do more than one Schedule E. But there's an interesting reason we learned in the last class, the one before Thanksgiving, as to why the IRS might be interested in the type of property this is from, how that can help them determine whether somebody may be needing an audit or just tell the IRS something about a particular line item of expense in this schedule that would help the IRS determine whether or not the taxpayer is complying with the rules properly. So that'll be a polling question. And I think when you see the question, it'll be somewhat obvious. But see, what happens here is you record the rents received. Those rents received, in a commercial setting for sure, you'll have received a 1099, specifically the 1099 miscellaneous, telling the landlord how much the rents were paid by the payor to the landlord. And even if they're not reported on a 1099, you're supposed to report all the rents you received. And then you record your expenses just like a profit and loss statement describing the categories of expense, including depreciation down here, line 18. And if you have others that aren't included in this list, you can make a separate list and tell what those are. And of course, then you'll get to the bottom line as to whether you have income or not, and that income will go back to Form 1040, the first page. So that's what these schedules wind up doing. They wind up telling the IRS more information that all flows to page 1 or 2 of the 1040. How did I get there? I thought we were going, we didn't do find. Okay. So here we go back. So that's the way these forms work, is there are oftentimes schedules that are attached to the tax return, which brings the information to the front of the return. This front page acts like a summary, summarizing all the W-2s, all the 1099s for taxable interest, all the 1099s for taxable dividends, etc. If we were of course covering farm income on line 18, we would have a Schedule F, which would compute the farm income or loss and bring it forward to the front page. Notice that Social Security benefits can be taxable. Line 20A, we put the full amount received as Social Security benefits if you're age 62 or over, or receiving Social Security benefits, I guess, for some other reason. And the taxable amount will depend on rules as to what is taxable out of the Social Security benefits or not. So somewhat of as a review and also as a good polling question and a place to stop for now would be look into the textbook as to how much and under what conditions Social Security could be taxable or not. And that's enough questions, that's enough information, that's enough time. So we will leave you for the moment and we'll come back and do another one of these and we'll pick up where we left off and continue on the forms and hopefully get into the accounting methods at that time.